going to do a quick video, something I want to just put out there. Smart money trading, a lot of people are doing it. I'm doing it, love it. Institutional trading is the best. So I have my chart here, Renkos. So most people know that I do trade Renkos as well. It cuts the noise out. I don't worry about getting stopped out or getting manipulated by the markets, by stop hunts and things of that nature. So what you're looking at right now is called mean Renkos. You can get them online. You can get them. You can download them. I wouldn't recommend downloading any Renkos. We have to change the ATR and so forth. I'm going to put the link in the video as to where to get these specific Renkos from. The reason why I like them the best is because not only do they have the wicks, but they also have the developer made them in such a way where it mimics the trading chart of the candlesticks charts. So what I mean is we have looking at a H1 time frame of Euro JPY. As you can see, take a look at this. So we have a straight down, we have accumulation, we have a stop point down, and we have a up move. And what do we see here? We have the same thing. We have move down, accumulation, down, uh, and move up. So pretty much it mimics the same chart. And the reason why that's important, at least for me, is that because Renkos are based off of price and not time. And what that means is that on a candlestick chart, every hour, 4 hours, or whatever your time frame is, you're going to receive a new candle. This one here is going to move based off of your brick size. This is a 60 brick frame, which represents six, looks like 6 pips, but really each brick frame you double the number. So this is actually 12 pips. So each brick is going to represent 12 pips or 12 ticks, whatever you want to say. I'm going to use pips because that's what most people recognize um, in Forex and trading, pips. So every time price moves 12 pips, you're going to get a new brick. And so what's going to happen is if, for instance, on the candlestick chart, we have a candle that moves 24 pips, we're going to have 2 bricks that's going to be printed here. Okay, so that's pretty much it. And that's why I like um, Renkos. It cuts out the noise. I'm not worried about manipulation. I also have on here an order block indicator as well. Let me just see if I can get rid of this right quick. As you can see, same principles as before. So let's just take a look at this. I have also some levels here as well that shows my uh, support and resistance levels as well. Um, these are 4 hours and the gold is the daily. So they're very strong support and resistance levels. So well, let's just take a look at this here. A little bit of how the Renkos work. So we see with the wicks, not every brick has a wick at the end, and that's key because the wicks signify something significant. They represent either a bullish engulfing or either a bearish engulfing. They also can represent showing you a higher low and higher highs from a lower time frame perspective. And what I like about this is because a lot of people have been showing and hearing, and even myself at one point, and even still now, sometimes if I'm on a candlestick chart, wondering about which order block of supply or demand level is going to hold and not be violated, which one's going to be respected. And I've come to find that in working with Renkos, it has become 100 times easier to find where that order block is going to be used and respected at. Okay, so it's the same method as far as using the Fibonacci's and discounting and premium levels. So now we're just going to take a look here. Let's not look at these levels just yet, right? So first of all, what's the first thing you notice? The first thing you notice is that you can easily identify trends because unlike candles, we have a whole bunch of consolidations and little kick bricks, candles with black and red or black and white, whichever colors you decide to use all over the place. This one helps you to identify the current trend that it's in. You have an overall trend, of course, and then you have a macro trend, and then you have a mini trend, so to speak. So this here, you see this whole thing here, it's everything, you clearly see that it's bullish. So what happens? The same thing, we have a, you can see, as a matter of fact, I don't even have to draw it out just yet. You see my level here. You can see that it has been broken and it has created another one here. So it's even showing you that these are talking about major levels here. So this one level here came down. This whole thing is a level. And these are your minor structure points that's also been broken as well. Okay, but let's just start here without peak formation high. I have an indicator that has telling me that, okay, right now have reached our peak and so forth. Price has not broken this particular high. So what looks to be like a selling trend about to happen, right? These lines here on a lower time frame, you'll see it much more clearly, but they represent the Asian high and low session. So previously, this day here was the Asian high low, and this was the Asian high. As you can see here, this was the Asian low, and this was the Asian high. So come to the chart, you reach the high, price comes down, breaks this low here. So again, remember I said that each brick, the wicks represent on a lower time frame a structural point. So this was a higher low, this was a higher low, this was a higher low, this was a higher low. So it came down with price retraced, created a higher low, pushed up, created another higher low, higher low, higher low, higher low. So from a minor standpoint, we see that structure was broken by this brick right here, which technically from a candlestick perspective was basically a liquidity grab. And then what happened? We pushed back up, and we see we had a 4-hour level of support. We pushed back up into an order block right here. Order block would be, of course, we know the last bullish candle, so it's the buy before the sell um, in a selling, and then the sell before the buy and the buying. So you push back up into this order block, right? Again, remember each brick is 12 pips, so technically you have a 12 pip stop loss if you enter on the beginning and at the entry of the order block. So technically, using using Renkos, you're guaranteeing your stop losses by a certain amount because of the brick sizes. So depending on how many bricks that you use for your stop loss, you know what your stop loss is going to be. Okay, so we came back up, and then what happened? We actually now broke this structural level right here. And I like to look at two candles or two bricks for me to look at it and call it a valid retracement. So we have a valid retracement here. So this makes us a lower high, and we see that it was broken, right? And then what does price do? It comes back up into the same order block. I mean, we could have used even this order block down here if you wanted to, and just bring it down, as you see, and would have tapped definitely into it. But you could have just left it there. That's what I would have done. I kind of just left it at the original order block, and you would have been negative. I think this was like, yeah, 5 pips. 5 pips. Okay. So we see that the structure it created, we see that it's recognizing that it has created a higher low, a higher high, a higher low, but this structure was broken. It came back up. It created a lower high, came back into this order block, and then we dropped off. Now, if you want to wait for something more clearer instead of reading minor structure points, you see this is a clear indication that a sign of weakness is here. And what does it do? What order block are we going to come up to? Would we be coming up into this order block? It's possible we could. But what does it do? It comes back up into this order block right there. You can see clearly where the order blocks are. If we miss that one, we see a structure break here, comes up, it breaks that structure, creates another lower low, and then where is the order block in which it's going to come back up into? This order block. Taps right in, creates a 4-hour level of structure, and then we break down to the downside again. We create a drop, a base, and then a rally, and then we start to push up. So then, again, as we always say, we know that even in the candlesticks that price will violate certain zones because, again, you take your fib out, you want to look for, we're looking for sell, we're looking to sell, so we're going to be looking for things that's going to be above the 50%, right? So we know that this would not be an order block that we would use for a sell because it's not in a discounted zone or premium zone, actually. I'm sorry about that. It's going to be above the 50%. So we see it's already happened already, but what do we see? We see 61.8, 79, 86, and so forth. So what I'm looking at is all these structural high points in the lower time frame that has been broken. So what I'm going to do, just like with the candlesticks, is I'm going to go down to a lower brick frame. Same thing like going down from 1 hour to a 30 minute to a 50. I'm going back to a lower brick frame, and I'm going to look for an indication of where price could possibly go that's going to give me some type of um, entry. So above the 50, what do I see sitting right here at the 61%? We see a level consolidation, you want to call it. You want to call this a base point um, here. And what I'm going to do, I'm just going to draw it out. I'm going to draw the whole thing out because it's small. And I'm going to bring it, let's make this a little bit smaller. I'm going to bring it, as you can see clearly, where it taps into, right? So let's go back up to the 60. And you see price taps into it. It actually closes below a 200 EMA. It's in a premium area. The 61.8 is above 50%, and then it begins to drop down. So that's how simple it is when you use Renkos in smart money trading. We also have a 4-hour level of uh, resistance that has been printed. And this is the trade that I missed. I was waiting for it, but I got so busy. I'm doing some other things that I missed it. We have our ADR. And what happened? They created an order block. So if price, I'm hoping that Sunday, Monday, price comes back up into this order block and then continues to come down. Because right now we're getting close to a level, a daily and 4-hour level of support down here, but we're also coming into an order block. So I'm going to see what price does Sunday, Monday up into this area. I'm looking for price to really come up and then come up and maybe up into this area here before dropping down to a daily level of supply. I'm looking for it to come up in here somewhere, but we'll see. It's also a harmonic, but I'm going to get into a little bit more depth again on how you can use harmonics. Let's look at NZD CAD. So same thing, I start out with generally on the 60. It could represent an hour. I'm not really for sure. I can go back and test and see. Looks pretty much a little bit the same. Let me just take off these date breakers here. 1 second. Okay. Okay, it's a little choppy. I don't really trade NZD CAD, but I was just really looking at. I have a currency meter too that's going to give me some indication of which pairs to trade, which ones are strong, and things of that nature to take a look at for the week. So it shows me that NZD CAD is pretty good for a sell. Well, CAD definitely selling, so NZD is buying. So I just wanted to throw it up real quick just to see. So looking back at Renkos, we see we have our peak formation high. We see that we have a break-in structure here. Price comes back up into the order block and creates a 4-level area of resistance right with a daily level, so it's very strong. Then price comes down, we drop, we break this level of support, we bring back up, we stop back into this order block here because it wasn't mitigated, and then we drop back down. We do start to create a 4-hour level of support. So this is an order block right here, but there's also the order block right here that this indicator has printed that price actually may come up into. So what I'm going to do is I'm going to hope, I'm going to leave it, I'm going to actually put my rectangle right up in here and see what happens, because then we'll have 2 drops, come back up, and maybe we'll drop down at least to the 200. So we'll see. But let's take a look again. I was looking at this earlier as well. Let me just take off. So I got people in my house, so if you hear people in the background, that's what it is. Let's take a random area. Let's go back over here. Again, Asian high, Asian low. Let's not worry about that just now. So what are we looking at? Price has come down. We've come back up. We've created, it actually looks like a little bit of divergence here. This is from the indicator. We didn't break this high. We came back down. Here's the order block here. Price comes back into. You can use the bottom wick of that right there to give you 50% of the order block. And look at that, how it taps into it. So once you tap into it, we can see that price comes back up, then comes back down into this particular order block here. So we have another order block that was created, comes up, comes back down. So we create a higher low, right? So from a lower time frame, we create a higher low. Then we come back down into this order block. So we have 3 order blocks we could have taken in. This order block here. And so we always want to, same thing with the candles, you don't want to be precise. You want to pay attention to the details. And sometimes for myself, uh, I can get lost. I won't say lost. I can fail to pay attention to the details of the entries. So once price comes here, let's just start back here. We come here and we have this nice bullish run up. It creates liquidity, as we can see clearly. It comes back down, right? It creates another order block here. We're not looking for that right now. So we know we're going to have to come and run out this liquidity. Comes down into this order block, but it doesn't break the high. Because when price, I've heard this from Track Effects in one of his videos. Once price comes into an order block, we're looking for it to really shoot and momentum and just shoot out. And we're looking for it to break the previous high or low. So what I'm looking for when price comes back down into this order block for it to break this high right here. But it doesn't. It comes back down. It gives some momentum. It creates liquidity here. Actually, it takes out this liquidity here, but it doesn't break this high. So in my mind, it's not finished with this order block. And what it does, it comes back down into this order block. And what happens? Then it shoots out and it breaks this previous low high. But let's say you're not for sure if you want to get in yet. You see price comes back up. It creates another higher low. So we know that on lower time frame, the structure has been broken. And so what happens? It creates an order block. And now this becomes the last order block you could have taken an entry on, and you could have taken it up. And so, of course, back with the fibs, you want to take it from the low to the high. And we're looking for a discounted area below the 50%. So what happens? Price comes all the way back down into where? This order block that was created. I'm sorry about the noise. I'm probably going to have to do another video. It comes back down into this order block that was created. And now what happens? We're looking for this high to be broken. It comes back up. It shoots up, breaks this structure high, low point on the low time frame, comes back down, doesn't break this low. But you're saying it doesn't come back into an order block. But what does it do? It actually creates an order block here. So it creates one here, comes back up. So this would be the order block that you would take. And what happens? It breaks this structural low, comes down, then breaks this high here, and it comes back down into this order block here. So really, if you want to wait for the actual structural break here, as some people do, but that's what they wait for. Instead of minor structure breaks, they wait for the major structure break, which will be right here. It comes back down into this order block, and that's when you'll be able to take it and ride it all the way up. So the same thing, wondering, well, price doesn't really come back down into any more order blocks. You can probably go down to a lower time frame and find order blocks within these rallies here. I'm not going to do that because it probably won't let me go back that far on the Renkos. But that's just a little tidbit on how Renkos can simplify your smart money institutional trading, so that way you'll get a better risk to reward, and you'll see and trade much more calmer. All right, so until next time, because it's getting kind of loud out here, I'll talk to you later.